Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up slightly, as you can see here on the S&P. We're up about looks like 0.2% on the S&P, and pretty much across the board, we did see some surge on the financial sector and the energy sector there, but overall kind of flat, slightly bullish day today. So let's try to figure out, we got 2 more days, right? Today's Wednesday, so we got Thursday, Friday trading left here for this week. Let's see what we can expect going into tomorrow and possibly remainder of this week here. So it looks like we did see that gap down today. So this is where it closed yesterday, right? And this is where it opened today. So it closed yesterday at 366. It opened up at 365-ish, and then we did see some fluctuations here to the downside. Dip was bought quickly, and as I zoom out later, you will see why this was an important level. This is where the gap was. We'll talk about that. And then we did see that push to the upside. That's the first hour. On the second hour, that gap was filled right away, right? The gap, right? This was a gap down. The gap got filled right away, and once that gap got filled, that level acted as resistance. So you can see here we stalled for about a couple hours, right? First hour, second hour, third hour, fourth hour. And as you can also see that even with this gap down, you can see that my short-term moving average was rising, right? This is why we gave it short-term sentiment or short-term benefit of the doubt goes to buyers, right? This is why, despite the fact that we saw a gap down, how quickly market was able to gap back up here with my short-term moving average rising. When you see the short-term moving average rising like that, you're gonna see that buyers gonna fight for that decline there. And so that's what we see: first hour, second hour, third and fourth hour. Once that gap got filled, stall a little bit. Fifth hour, you can see that we came back down and tagged my short-term moving average here. So we came back to it, and once again we did a little bit of bull flagging there in the micro term. And on the fifth hour we did see a push, and this is kind of a short to micro term pivot there. That's a prior support, became a prior resistance. And then on the 6th hour, we did see that level acting as support. We did push a little bit higher. So we want to continue to give benefit of the doubt to the buyers in the micro term and the short term, as you can see here. Let's zoom out a little bit and trying to figure out, or trying to look at the little bit of bigger picture here and see what we can expect. A little bit of longer term here. So as I zoom out a little bit, as you can see, and we've been tracking this rising pivot, I think, this entire week. As soon as we saw a gap up on Tuesday, ever since then, we've been tracking this rising pivot there. And obviously, you can see that how that level did act as support today. We talked about the gap yesterday, right? And you can see how this was a gap up yesterday, and we saw a slight gap down. So there was some attempt to fill this gap, but this gap was not filled all the way, maybe about fourth of it. Not fourth, but I'm talking about 40% of the gap, right? So you can see how this entire gap area a lot of times is going to act as support, right? Not only where it gapped, or where it gap fill area, but usually that entire level is going to act as support. And that's kind of what we saw in the first hour today. Despite the fact that, we did see a little bit of gap down, and there were not enough selling pressure to come all the way back down to fill the gap. And I think mainly because we had that rising pivot right there coinciding with my short-term moving average and the horizontal pivot. So we got like triple supports all hanging around in that vicinity and the gap area. So with that little bit of gap down, buyers stepped in and then, continue to push there. So, and with that, this market is continuing to cultivate that higher highs here, and then that little higher low. We don't know as of today. I mean, we got that low, we got that higher low. Is this going to be that higher low before this making a higher high, or are we going to come back down, maybe tag it again? Because we see something like the here, a little double bottom there, but on this time it didn't see that. So it's trying to figure out the very, very short term, the micro term movement is extremely difficult, and trying to profit from these tiny moves is going to be the most extremely difficult way to profit in the market consistently. So I would look at things more bigger picture and to ignore this shorter term fluctuations, because you're trying to figure out this thing going from here to here, trying to profit from this and that. Obviously, if you're a day trader, I guess you're exempt from that. But if you're trying to hold things longer, then I'll recommend not trying to figure out the short term movement of it, but maybe trying to figure out where are we as far as a midterm is concerned, right? So obviously my midterm moving average is still rising. We got the rising support coming here. So midterm sentiment is definitely bullish here. So something to watch out for tomorrow is this rising pivot. Short-term moving average is holding. This gap area still holding. So what it means is if this thing does come back down, that means 390, 364 is going to act as pretty strong support. And then we got the rising support in that vicinity as well. So we got a lot of support in that area, right? The market is going to find buyers in that vicinity, at least in the short to micro term. So we want to continue to give benefit of the doubt to the buyers overall. Let's check out that oscillator and see, how it's doing. So you can see that we did see a cross here, right? So that means buyers are starting to get tired after this move here. As you can see, as we are cultivating that higher lows, oscillator is also following that trend with that higher low. And then once we start slowing down here, oscillator is also slowing down here, and then price is also be moving sideways. Sooner or later, it's going to break out of this trend because we're kind of trading up and down a tight range. And then what happens is once there is enough pressure, market breaks out and gets into a prolonged uptrend. We saw that back in May through June. We saw that I think September or so, September through October, because at first, market getting a tight, contraction, tight range of price action movement. And you guys remember how at some point this thing will break up to the upside, and then it can get into kind of more of a prolonged movement to the upside. And we don't know that when that is going to happen. A lot of times it happens so slow. You think, when is it going to happen? When is it going to happen? You realize you're already part of it, right? And once you realize, oh my God, we're in this long, prolonged uptrend, it's already ending. And that's kind of the beauty of, being part of and riding this bull market. What you have to understand is it takes much longer for the buyers gain momentum. It takes much shorter for the bears to bring it down, because bears can bring it down at any given moment, right? Boom, 2%, boom, 2% gap down. But understand that's not how buyers like to operate. They like to take its time. And I think that's why there's a misconception where people think that you make much more money shorting, because people say stuff like, well, I could make, 10, 20% drawdowns, where bull's going to take a month or a year to make that. Because the reason why that's a fallacy, that's a false statement, is because it is extremely difficult to time that pullback or time that volatility, right? And a lot of times people are trying to short, they miss out big move, right? So we've actually, S&P had about 70-80% move since the March lows. NASDAQ, 80-90% or something like that. A lot of bears are, focused on the shorting the market. They missed out on that move, right? Versus, maybe some traders and investors caught off guard with the COVID decline. If they were able to hold, if they're long-term, I'm talking if they're long-term investors, not panic, but hold, maybe even bought some more at the lows, they're doing really well. versus trying to time everything. That's the difference what happens in a secular bull market and a secular bear market. So anyway, looking at this oscillator here, I think there's a little bit of weakness here. So the question is, are we going to come back down to maybe retest this? And it's kind of in that vicinity where buyers are getting tired. We did see that cross. So I think this is a level where the short term we might see some kind of, so basically what I can see from this oscillator cross is that unless there's some kind of shenanigan abrupt sell-off like these, like gap down just out of nowhere, 1 or 2% down days, this market can continue to grind higher. And despite the fact that even if you do see something like this, not to be overly bearish, because it's going to get to a certain level and it's going to find support, as you can see here. This were gap area, found support, gap area, found support. Currently gap area is at 364. So I want to continue to remain bullish, but at the same time understand that in any kind of bullish run, there's always a risk of this market seeing some kind of abrupt sell-off, and it's just part of this market. You can't try to avoid it every single time. Instead, what I could recommend you do is, I want to develop a strategy where I can hold through those short-term fluctuations, or maybe even accumulate more, but I want to ride that big move. And that's how I think you can truly grow your account. Anyway, I'll come back for you guys tomorrow. Enjoy your evening and good luck trading tomorrow.